The elusive strategies on creating wealth don't have to be so elusive after all. One of the main pillars of wealth building is creating flows of income. There are several types of flows of income, but one of the easiest forms of income is something called capital gains. Easier said than done, capital gains are created by consistent and methodical investments over time that can create substantial recurring income over the long term. But patience is key, along with having the right vehicle and strategies to create wealth and retire early using this type of investing. Now that 2020 is upon us and the market is at all-time highs, opportunities are available to take advantage of key growth stocks to invest in during this new decade. In this video, I will discuss 5 top growth stocks to invest in for 2020 and a key strategy that can be used to grow your income using capital gains. Get ready. You are now entering the Academy. Capital gain is a rise in the value of a capital asset, investment, or real estate that gives it a higher worth than the purchase price. The gain is not realized until the asset is sold. A capital gain may be short-term, 1 year or less, or long-term, more than 1 year, and must be claimed on income taxes. A capital gain can occur on any security that is sold for a price higher than the purchase price that was paid for it. Realized capital gains and losses occur when an asset is sold, which triggers a taxable event. Unrealized gains and losses, sometimes referred to as paper gains and losses, reflect an increase or decrease in an investment's value but not yet have triggered a taxable event. Short-term capital gains occur on securities held for 1 year or less. These gains are taxed as ordinary income based on the individual's tax filing status and adjusted gross income. Long-term capital gains are usually taxed at a lower rate than regular income. The long-term capital gains rate is 20% in the highest tax bracket. Most taxpayers qualify for a 15% long-term capital gains tax rate. However, taxpayers earning up to $38,600 or $77,200 for those married filing jointly would pay a 0% long-term capital gains tax rate. A growth stock is a share in a company that is anticipated to grow at a rate significantly above the average for the market, which is typically 6 to 8% per year. These stocks generally do not pay dividends, as the companies usually want to reinvest any earnings in order to accelerate growth in the short term. Investors then earn money through capital gains when they eventually sell their shares. Investment in growth stocks can be risky. Because of the lack of dividends, the only opportunity an investor has to earn money on their investment is when they eventually sell their shares. If the company does not do well, investors can take a loss on the stock when it's time to sell. Today, growth stocks compose a range of technology, biotech, and some consumer discretionary companies. Growth stocks differ from value stocks. Investors expect growth stocks to earn substantial capital gains. This expectation can result in the stock being overvalued. A solid entry-exit plan as well as consistent reinvestment of capital gains and dollar cost averaging are key with growth stocks. Value stocks, on the other hand, often are underrated or ignored by the market. They may eventually gain value, but investors also attempt to profit from the dividends they typically pay. Dollar cost averaging is a strategy that allows an investor to buy the same dollar amount of an investment on regular intervals. The purchases occur regardless of the asset's price. As the price of the stock drops, dollar cost averaging allows an investor to purchase more shares at the same dollar amount. And as the price goes up, purchases are for less shares at the same dollar amount. Consistent dollar cost averaging is the key to increasing positions in a portfolio over time, thus increasing the value of an undervalued and underappreciated stock. This formula creates maximum potential for returns and gains, building up a position of a stock while it's undervalued and waiting it to appreciate to gain big profits. In the meantime, while waiting, those stocks that pay dividends provide a nice bonus that can be reinvested back into the same stock. Now, for our growth income portfolio, we can select growth stocks that can be deemed as undervalued regardless of the PE ratio based on market sentiment as well as the future direction each company is heading toward. The growth income portfolio consists of 5 growth stocks that can be seen as great investments for 2020 and beyond. For portfolio, we have, first, Amazon, ticker symbol AMZN. Amazon has been one of the most successful growth investment companies in history over the past decade, gaining more than 1,210% overall. In 2020, analysts are projecting another year of 20% revenue growth for Amazon, outpacing many of its smaller tech peers. Gross margins should continue to expand, improving profitability. By 2025, Amazon Prime will have more than 250 million members, and its advertising revenue will likely triple. Long-term trends of cloud consumption should propel Amazon Web Services revenue even higher, likely continuing its strong growth in digital advertising and an increasing predominant growth in e-commerce of third-party sellers. An easy buy rating, the current price target for Amazon is $1,950, but don't be surprised if it surpasses all-time highs and reaches the $2,300 plus price range in 2020. The next stock is Facebook, ticker symbol FB. Despite a never-ending parade of negative headlines related to data abuse, political manipulation, content violations, regulatory crackdowns, and antitrust risk, Facebook continues to deliver impressive growth numbers and outsized returns. In fact, 2019 has been another huge year for Facebook, with the stock up 48%. And in 2020, it is expected that EPS will grow by another 19.7%, with daily active user count rising another 5%. And the scary thing is that it's still heavily undermonetized. The biggest growth source for Facebook will be monetization of its users. Once they are able to perfect it, watch out. FB has an analyst buy rating and $233 price target. But Facebook can easily surpass this target and reach up to $250 plus in 2020. The next stock or company is Alphabet. Like its FANG peers, Amazon and Facebook, Alphabet or Google, ticker symbol GOOGL, has another big year ahead in 2020. Increasing profitability of Google Cloud is one of the biggest near-term growth drivers for Alphabet. Google Cloud will reach $23 billion in fiscal 2021 revenue, up 170% from $8.5 billion in fiscal year 2019. In addition to its cloud business and advertising business, Google's Waymo autonomous vehicle business could be a major long-term growth driver for investors. This is one of the strongest buys with an easy price target of $1,737, and don't be surprised if Google hits the $2,000 mark in 2020. The next stock is PayPal. Payments provider PayPal, or ticker symbol PYPL, could see its revenue growth accelerate not just in 2020, but 2021 as well, at more than 15% on average. A growing number of consumers and merchants, including the outside of the US, are using PayPal as a payments provider. Almost half of the company's revenue is derived internationally. PayPal recently became the first foreign company licensed to provide online payment services in China, the world's largest e-commerce market, with online sales expected to reach nearly $2 trillion. PayPal will continue to grow as more of its users pivot to mobile. Venmo, PayPal's mobile payment services, should continue to grow over 50% year over year each quarter in 2020, with an increasing number of merchants accepting Venmo directly, such as Uber, Uber Eats, Grubhub, Hulu, and Fandango, leading to monetization of the Venmo product as well as a way to keep consumers and customers inside of PayPal's ecosystem. Costs to external payment processors such as Visa and MasterCard will drastically be reduced, further enhancing profitability. The analyst community as a whole believes PayPal will bolster its top-line revenues by 15.9% in 2020 and send much of that to the bottom-line profits, expected to grow by 14% year over year. That puts PayPal among some of the best growth stocks among blue-chip companies. With its current price being the tip of the iceberg, look for continued growth of this stock and it potentially hitting $150 in 2020. The last company is Salesforce, a cloud-based customer relationship management software company. Salesforce, ticker symbol CRM, is one of the original cloud companies. The customer relationship management CRM specialist has improved its revenues by roughly 20% annually over the past 5 years. Wall Street is expecting 28% top-line growth in Salesforce fiscal 2020, which ends January 31st, 2020, and another 23% for fiscal 2021, which begins February 1st. Salesforce is a clear leader in digital transformation, given their customers' desire to have a 360-degree view of their own customers, and a broadening portfolio should help drive exceptional growth for years to come. With a fair value estimate of $186 per share, that falls in line with Wall Street's broader view on CRM. 40 of the 43 analysts currently covering the stock call it a buy or better, and on average, they're targeting prices of $190 per share, or about 17% upside over the next year. By employing the growth portfolio included in this video, along with the strategy of persistent investing and dollar cost averaging into positions, one can create a sizable growth income portfolio that will appreciate over time and continue to grow, providing growth income opportunities along the way. Through careful planning and diligent investment of capital, as well as reinvestment of growth income, one can create income streams that could provide substantial income, eventually covering everyday expenditures and beyond. Although there are stocks in the portfolio that have costs per share exceeding $1,000, there are stock trading and investment apps that provide opportunities to buy fractional shares for even $10 per stock. The M1 Finance stock trading app provides a great vehicle which allows for commission-free buying and selling of stocks, as well as purchasing of fractional shares, thus providing a great way to create and grow a growth income portfolio using the methods mentioned previously. And M1 Finance now has a promotion where you will get $20 if you sign up now, and an additional $1,000 if you get 10 people to sign up as referrals. So be sure to take advantage of this promotion, and more importantly, start your growth portfolio and start your path toward financial independence and freedom. Thank you for watching this video. If you enjoyed watching, don't forget to smash the like button. It will really help out the channel, allowing it to grow to get this information out to the masses. And if you haven't done so already, be sure to subscribe to the 10X Academy. And don't forget to turn on the notification bell to be alerted on more passive income strategy videos. This is the 10X Academy.